How should one approach the FOO if they are new to it? Apply only new money to the FOO steps or redeploy assets from somewhere else. For example, I didn't have emergency savings and I bought a new car on a 60-month term, but I have a taxable brokerage. What do you think?
Yeah, I think so. The FOO is great in terms of, and by the way, Brian, will you hold the whole thing up? For those of you that aren't familiar, the FOO is the financial order of operations, 9-step tried and true process. And what we say is it's what to do with your next dollar. Like it lets you know, okay, what should I be doing? But for someone like G-Dash, if you are coming into this right now and you are brand new to it, the financial order of operations can be an amazing initial assessment. Like I look at this and I say, oh, okay, I understand academically that I'm supposed to work through the FOO this way. I go from 1 to 2 and 2 to 3, 3 to 4, 4 to 5. When I look at my situation, I say, okay, well, I've got a taxable brokerage. That's kind of like a 7, but I don't have any emergency reserves. I got a 4, but I don't have any high interest debt, a 3. What you can do is you can now triage and assess where you have holes inside of the financial order of operations. And my encouragement to you would be, I would begin to double back and say, okay, are there places where my life is at risk? For example, I have a lot of high interest debt or I don't have an emergency fund fully funded. I would begin thinking about how can I restructure, redesign, reallocate my resources to cover those risks so that I can continue moving along the FOO. Brian, we recently had a Making a Millionaire episode with Eric where we did this exact thing. Like he was following the FOO and we recognized during the assessment, man, you've kind of got it out of order. You've still got this stuff going on over here. We got to go back in time to go fix and triage those things. G-Dash, I would say it sounds like you are in a very similar situation.
I think because you're talking money guy terms, but you need to understand how they are all intersect and interconnect with each other. The financial order of operations are very big money decisions to kind of know what to do with your next dollar, but also to know where you are kind of in the process. You mentioned that you have a car that's financed over 60 months. Mm-hmm. Cars and house buying, for that matter, you don't see any one of these things talk about cars or house buying, but it's a good, if you read, I mean, this is really going deep on FOO lore. Millionaire Mission kind of gives you the why on how all these things were designed and implemented. And you'll know that emergency reserve step 4 is when you start getting into the intersection of other rules on best practices with your money. It's like, should you buy cars at 23.8? That's steps 3 and 4. When you get into house buying, that's typically after you do a fully funded emergency fund. That's and we have checklists, and that's where whenever you have these life events that intersect, that's why you got to go to moneyguy.com/resources. We have created all these free tools, calculators, as well as downloads that you can go and grab and see, because this is supposed to just scratch the surface of, hey, you got a problem. If you triage your financial life, you can tell you probably are out of order or out of sync. So then go and layer in our tools to kind of fix this. And that's why I always tell people, when you come into your financial situation, I even saw you brought up Eric in that Making a Millionaire episode. Somebody was like, man, why aren't they picking on him about this decision more? And I'm like, that's mean. Why would we sit there and just you can't go back in time and fix your past mistakes, but you can get educated on what to do with your next dollar so that you don't repeat those mistakes again. And that's what I've tried to create by coming up with all these tools, these models, is because I would encourage you, if you do have a car that's now financed for 60 months, and that's the only way you could afford it was because you financed for 60 months, you probably need to quickly do that financial triage exercise, overlay it with 23.8. What would you have to do to get this thing to actually now be within the threshold of that it does fit? Does that mean you need to pay down the loan quicker? You need to go pull some of that brokerage account or other things down to pay the car down? Do you need to pay more on a monthly basis? Maybe you've got enough pay raises where 8% of your pay now could go to a higher, so you could extinguish the debt in 3 years versus that original 5 years. There are ways that you can look at with the financial order of operations where it intersects with key rules of life, like how to buy a house and the checklist, the 23-8 rule. All these things work in tandem with each other. And that's why we've tried to create a better mousetrap, a better system, so you know what to do with your next dollar and not get caught up in the past. Not where you have all regrets, but you do learn from our mistakes, from the mistakes of our audience that has been shared, and all the data we've shared to help you make better decisions and live your best life.
One other thing, since you are branded to the food, that would probably be a great idea is make sure you subscribe to the channel. If you subscribe, you will be updated whenever we have brand new content coming out. We have tons of new content coming your way that can hopefully continue to educate you on the food and let you learn more about how to do money better. And for the rest of you that aren't G-, you should also subscribe.